Aditya Shah is joining us, Hercules Advisors. Aditya, you track banks closely. HDFC Bank margins, will that be the larger focus area now that growth is behind us in terms of the numbers itself?
Absolutely. The stock will move the day the NIMs start to recover. The market gets a sense of NIM starting to recover. And obviously, HDFC Bank needs to get away from the limelight and just focus on business, stable loan growth, stable deposit growth over the period of next 3 to 4 quarters without being in the news for all the wrong reasons would augur well for the stock price per se. So from my perspective, steady business, no noise, and I am recovery should be the mantra of the management.
Aditya, from a seasonality standpoint, sometimes we see Q1 to be a quarter where HDFC Bank does slightly higher provisions. So therefore, that should not perturb the street at all. But what would you want to hear from the management in the commentary that should really ensure that it exudes confidence to the street? Because the street currently is not valuing HDFC Bank like it used to. Plenty of reasons why. What is it that the management can repair?
Simply accelerate the retail loan growth, accelerate the deposit growth. Those are the two biggest levers that the management has really got for NIMs to really recover. Obviously, if the NIMs move from 4% to about 3.38% on a more merged book, the profitability obviously would get a hit. HDB financials result were fairly okay. Nothing to complain about as such. But from my perspective, in the commentary, the street would like to see what are the levers for margin recovery. What does HDFC Bank guide for loan growth and deposit growth in FY27? And how stable is the top management? We've seen concerns over the period of last 6 months over the top management, and now Mr. Shashija Jagdishan is up for re-elect as well. So from my perspective, stability, business stability per se, and margin recovery are the three core points to look for HDFC.
Stay with us. I'm going to, analyze some of the other earnings expectations as well with you. But let me quickly bring on board Mithali once again to tell us what the ET Now poll is penciling in for both Axis as well as Kotak's numbers.
Right, okay, talking about Kotak Bank and Axis Bank, so the highlights for this season will be on the asset quality, the margin resilience, as well as the management commentary, as both these banks, they navigate from a lower interest rate environment. Now, starting off with Kotak Mahindra Bank, the NII is expected to grow around 10% yearly, while their net profits could see a surge of around 21% on a yearly basis, aided by lower provisions for this particular quarter. However, the net interest margins are likely to moderate around 4.5 to 4.67 odd percentage in Q4, reflecting deposit repricing and the impact of rate cuts. Asset quality, it is expected to remain strong with their GNPA and NNPA levels expected to improve for this quarter. The streets will closely watch the management's outlook on NIMs trajectory, the credit cost, as well as the deposit repricing, along with the commentary on the macro environment and the impact on their current books. Now, moving to Axis Bank, the NII for Axis Bank, it is expected to surge around 12% on a yearly basis, while the profit growth could exceed 20% on a yearly basis, supported by a sharp decline in the provisions for Axis Bank. However, the NIMs, they're expected to soften further to around 3.5% as the lower rates and a higher share of the corporate lending, they weigh heavy on the margins. The asset quality for the bank, it is expected to remain stable, although the seasonal first quarter slippages will remain a key monitorable here. Investors will focus on the margin guidance, the growth outlook going ahead, as well as the retail demand. Management's what is the outlook there, as well as the funding cost and overall profitability going ahead for Axis Bank.
Aditya, I want to get you in on Kotak Bank because that traditionally tends to be the swing factor amidst all the banking majors. Do you expect Kotak's NIMs to hold, or could there be a real compression risk there?
So I don't think NIMs would be a problem for Kotak. I think given the lower slippages across all banks, Federal Bank just reported their numbers, slippages there were also lower. So from my perspective, sector-wide, we are seeing slippages to be lower, and that will aid the NIMs as well. So from my perspective, that is a plus point, particularly for Kotak Bank. street is really very nervous about how Ashok Vaswani is going away. A lot of his team will also go away. So who is going to lead Kotak? Any guidance on that? Any color on that? Would be one of the biggest positives for Kotak per se. So from my perspective, management is is what I'm looking for Kotak Mahindra Bank.
Aditya, I mean, let me also bring on board Rajesh Palvia of Axis Securities into this conversation. Rajesh, I'll come to you in just a minute. Just carrying that point forward, Aditya, I'm just looking at the list of top management within Kotak right now, and Anup Saha really stands out. And he has been groomed by, of course, the Bajaj Finance management team. Which obviously places good favor in terms of the Kotak succession planning if he were to be made or elevated at some point of time. Do you think that is one of the lowest hanging fruit and could well be something that the street takes favorably if it were to come through?
What is really happening in Kotak is ever since Mr. Kotak left, the Uday Kotak premium has deteriorated, and the market has not been able to trust somebody else in order to give the valuation that it did when Uday Kotak was there. So we've seen a serial derating of Kotak Mahindra Bank stock over the period of last 5 years. So from my perspective, what the market will see is a good leader and a good leader at least for the next 5 to 7 years, where the market understands what the strategy is, how the bank will control the NPAs, and what the growth would look like. So from my perspective, Anup Saha, and there are many others within Kotak who have the ability to lead Kotak, subject to the regulator approving this. So from my perspective, as I said, clarity is something is one of the biggest factors that will lead to stock price returns for Kotak, and that's what I will be looking for in the results tomorrow.
Aditya, I have to draw your attention to PNB and other PSU banks as well. And, the broader expectation is that they're likely to see relatively subdued growth as compared to their private peers. Would you say that this is just seasonal, or would you say that there is a structural gap, so to speak, now within what PSUs may deliver as opposed to the private banking majors?
No, I don't think that growth is a major challenge either for PSU banks or private banks. We've about 13% loan growth, which is fair enough given the size of Union Bank. From my perspective, loan growth will be pretty strong. Deposit growth is where a little bit of challenges. We saw Union Bank just report a 5% deposit growth. Still, brand for all PSU banks is really very strong, so that should not be a major hindrance from there for them for loan for deposit growth. And after that, slippages are at a multi-year low, so that should also not be a problem. What the major challenge for PSU banks as well as private bank is how long can they sustain this performance of very low NPAs and very good loan growth. At some point in time, this will break and NPAs will start to mount for all of these companies. So from my perspective, that is something to watch out for over the period of next 2 to 4 quarters. But all of these lenders right now are in a honeymoon phase where all of them will report spectacular set of numbers, and that is why we see most of the banks up today in fact.
Rajesh, what do you make of the moves today on some of these banks? Some very, very strong moves, right? 3% on Kotak. We're seeing some decent moves even on HDFC. And this is just prior to the earnings. My understanding was positioning had become a little light in some of these banks, but these moves seem to suggest that there's confidence.
Yeah, hi, good afternoon. Yeah, definitely. So, banking is a space where, we have seen, multiple time whenever there is a dip, there is a buying interest in last couple of trading session from the lower level. Looking at the kind of, buying interest ahead of earnings, I think it clearly shows that, the street is confident enough to get, better number in this quarterly earning from the banking space. And I think the way most of the stocks like be it Federal Bank, Kotak Bank, RBL Bank, all these banks, even IndusInd Bank, all these banks are showing sign of strength on their near-term, short-term structure. It clearly shows that traders are also confident to create more positions. Bank Nifty is clearly showing a sign of strength. So I think there is further room to continue further more upside in the banking basket as Bank Nifty has already broken out the supply zone of 58,200. So I think if it continues to trade above here, we may see furthermore short covering to play out in banking stocks. And if I go with the technical setup, I think Federal Bank would come on the top of this setup. In fact, the kind of buying interest which we are observing in the Federal Bank, we believe that 360, 370 would be the next target. But on the large cap bank, I think Kotak Bank is also managed to give breakout of falling channel on the daily chart. And looking at the negotiation at 20-day, 50-day moving average supply zone, I think any move beyond 395 can take this stock further higher to 410 to 415 also. So Kotak Bank is also showing sign of strength on the near-term chart. At this juncture, one can buy with a stop loss of 380.
Okay, understood. All right, and what's the call on the index now, Rajesh? This move looks very solid.
So Nifty managed to give breakout of last 5 days, tight range consolidation. So and already we have witnessed short covering in from the call writers front. So call writers have shifted their position now towards 24,400, even 24,500 kind of strike. Put writers are looking more aggressive as they have building their position at 24,200 strike. So aggressive put writing at 24,200 and 300 strike is clearly giving us sign that base is now shifting higher, and the kind of short covering we have observed, especially in last half an hour of trade, we could see further higher trajectory 24,450, where we are projecting a target for Nifty. So trail your stop loss now towards 24,200 to hold the position. We could see another 100, 150 point kind of up move in the indices. And as I already mentioned about Bank Nifty, if it's sustained above 58,200, so another up move towards 58,600 to 700, we could see for Bank Nifty also.
Draw your attention to Axis Bank because historically it's always been a mixed bag when it comes to margins as well as the asset quality. What's your single biggest watch point when it comes to Axis's performance?
I think asset quality would be something that you would watch out for in Axis. It's been very turbulent over the period of last 4 quarters. In one of the quarters, they reported a one-time provision as well. So from my perspective, asset quality and stability in top management, there is a lot of churn. CFO from one bank is moving to another bank. That's how things are moving in all of these top banks. So from my perspective, NPAs as well as the stability in top management is something that I will look at in Axis Bank figure.
Aditya, I'm trying to understand among these top 4 private sector banks, where is risk reward the best? Because ICICI has always been the one standout candidate in terms of earnings, always surprising on the upside. So, but also trades at a slightly premium valuation. If an investor were to position himself medium term, not from a result perspective, but medium term, where does risk reward look the best?
So there are a couple of aspects to it. Or if you look at growth stocks, you're just purely looking from a growth perspective, or then SBI and ICICI Bank would be the top picks. At least 2 to 4 quarters still of this dream run for all of these lenders will continue. So from a growth perspective, those two will do extremely well. From a value perspective, Kotak and HDFC Bank will be the ones which you have to look out for. But both of them have their own unique challenges, as I said. HDFC Bank, too much problem, too much in the limelight for all the wrong reasons, and the NIM problem that they've got. Kotak, with respect to the management, as I said. So you have to categorize it that way. Only long-term investors who have the ability to stay in the stock for at least 3 to 5 years with small returns should invest in HDFC and Kotak. Otherwise, you should stick to ICICI Bank or an SBI.
Okay, Aditya, great to have you on the show as always, and we'll meet again once all these numbers are behind us to analyze. Good having you on the show.